So we are looking at the income from royalties. How is income from royalties taxed? This is income earned by a person for rights granted to others to use his intellectual properties. So royalties is a critical component of income which people earn on the basis of granting outright to someone else to make use of the property. These are income arising from right granted to other person for the use of intellectual property. Royalties means payment made as consideration for the use of number one, a copyright of literature, artistic or scientific work. Number two, a cinematograph film, including film or tape used in radio and television broadcasting. A patent, trademark, design or model, plan, formula or process. Any industrial, commercial or scientific equipment or the use of information concerning industrial, commercial or scientific equipment or any experience thereof, as well as gain derived from the sale or exchange of any right or property. So basically, we are saying the intellectual property right is based on royalties. So when you give royalties, in fact, the most lucrative business in the world is the business of royalties, is the business of trademark, is the business of copyright, is the business of patent right. So this is where business lies, and this is where income is generated. Taxation of royalties. Taxation of royalties depend on whether one is a resident individual or non-resident. Non-resident individual, they are taxed at the flat rate of 20% of gross royalty income. This is withholding tax, which is final tax. No expense are allowed against the gross income. So when you are a non-resident, you will be taxed 20% of the gross royalty income. And this is done under withholding tax, tax at the source. Resident expenses are allowed against gross royalty income to arrive at the taxable royalties. Expenses incurred prior to the period of production of royalty income are not allowed, e.g., expenses in nature of researching, testing, developing before commencement of generation of the royalty income. The net royalty income will be aggregate with other income of the residential individual and assessed on him using graduated scale rates in the case of an individual and corporate tax rate in case of body corporate. There is a withholding tax at source 5% to be off against gross taxability of the person. So if it is a person, the tax rate is 5%. If it is a company, the tax rate is 30%. So you need to have that in mind.